Good morning. I'm Filippo Giordano, Professor of Management at LUMSA University in Rome, and I'm the Program Director of the Master Degree in Management and Finance. I'm very pleased to introduce this second webinar of the Innovation Talks 2022 of the LUMSA University. Innovation Talks is an important initiative of our university, arrived at the 6th edition. It's a cycle of webinars aimed to discuss innovation, technology, sustainability, and the future of business in society with expert and opinion leaders in the business community. Innovation Talks are organized by the Department of Law, Economic, Politics, and Modern Languages, and the Master's Degree in Management and Finance that I chair, in partnership with the Association of Alumni LUMSA. In this edition, we will have 6 webinars where we'll discuss entrepreneurship, venture capital, innovation. In the first webinar, we talked about sustainable finance. And I sincerely thank all the colleagues who have collaborated in the realization of this edition, and all the communication staff of LUMSA University that is producing this webinar that you can follow in streaming on YouTube. And so I'm very pleased to introduce one of these wonderful colleagues of mine of LUMSA University, Domenico Nesci, that is our professor of venture capital and evaluation, is our expert, and he will share this talk. He will introduce our guest speaker, and he's the perfect person that can talk about ecosystems, because today we will talk about ecosystem that support innovation, entrepreneurship, in particular the comparison with between the American world and the Italian world, you know, Domenico. So thank you very much for this.
Thank you very much. Filippo, can you hear me? Just to be sure, because I wear the...
Yes, I can hear you.
Okay, very good, the earphones. Okay, so good morning, everybody. Very happy to be here. And I have the honor of introducing you to Andrea Ridi. I met Andrea a few years ago when he was running a company, a startup that started in Italy, Genova, and then moved to United States in the Boston area. And then from France, I got to know that he made a number of moves. And nowadays, Andrea just announced that he joined, actually is joined as Managing Director in the United States, BIP. He will tell you more about that. And today with Andrea, that is still based in the United States, of course. Today with Andrea, we will explore in deep detail what are the main features of ecosystems, innovation ecosystems in the United States and the innovation ecosystem in Italy. There are remarkable differences. Andrea has got experience on both sides of the ocean, in Italy and United States, so I believe he's in a perfect position to tell us more about it. But before going into the description, the storytelling about the ecosystems on the two sides of the Atlantic Ocean, I asked Andrea to introduce himself, of course, and to tell us a little bit more about his professional journey. I'm very curious to know in more detail how he started to work in Italy, and then what were, let's say, the reasons why he decided to move to United States and to basically land there and keep putting his professional efforts in United States and not coming back to Italy. So Andrea, welcome to the Innovation Talks. Again, thank you very much for your participation. I see that probably you are not right now in a building, but probably in a nicer place. I will not ask where you are. So the floor is yours. Very eager to hear more from you. And then when you finish, we will have a session of questions and answer. And I invite all the students to put their questions into the YouTube chat that you have on the right-hand side of your screen, and so that we will have the possibility to put interesting questions to Andrea after his speech. So Andrea, thanks again. The floor is yours.
Thank you, Domenico. It is a real pleasure to be today with you. I'm in the United States, and it's 6 in the morning for this reason that you are seeing a lot of black around me. Okay, I prepare some few slides in order to go in this journey. The topic is very wide, okay? And during the preparation, I decided to stay simple on some important concept to me because, okay, probably you need 1 year of discussion in order to enter in all the details between the difference between the Italian and the US ecosystem. The two ecosystems are really, really different. And in the next part of my speech, I will try to give you some real instrument to understand where are the differences between the two ecosystems. But I'm starting with a little bit about my story. Okay, I am a typical serial high-tech entrepreneur. Okay, I started my first company just after the experience like a researcher in the university, and my first company was in '98, and today we will classify this company like Internet of Things. Okay, I was let's say 20 years in advance to the future, and this is not always a good thing. In my career, I founded and ran more than 15 tech companies. I sold 5 of them successfully. 4 of them are still active, and I'm working with supporting or being the board of director and so on. All the other was closed or failed. By training, I am a physical researcher, okay, in particular in biophysics, and this, let's say, very good understanding of science, of technology, for me was really, really important. And recently, I have an executive MBA at HALT International Business School. And the MBA for me was another very interesting experience because complete my training. Now I have let's say, a strong technological training plus a very good managerial and economical training. As Domenico told, my last adventure was Rolex. Rolex is an interesting company because it was born like a spin-off from research, in particular from CNR in Italy. And when we started the company, we had only mathematical theorem. Okay, and with Rolex, I follow all the path from mathematical theorem to create some first engine, okay, software engine, and acquire the first customer, okay, interested in artificial intelligence. Starting from this engine, creating a products, okay, in 2013, we have one of the first no-code platform for artificial intelligence. And probably you are too young, but in that time, there was no artificial intelligence on the market. There was no big data trend, and the world was completely different. And at that time, when I started to craft the go-to-market strategy, I understood that it's quite impossible to become a technological leader starting from Italy, because Italy, there is no a real, let's say, is not known for high tech. Okay, Italy is well known for food, is well known for fashion, but there is no a very solid, for example, software or innovation tradition. There is no a real ecosystem able to sustain you during the different phase of growth. There is not the right talent to become a leader in an high-tech space. Then I decided to move the headquarters in Boston. Okay, the change from Italy to US was absolutely dramatic. Okay, imagine starting from Genoa, arriving in Boston, start to pitch to the ecosystem that you have an incredible technology. Okay, the reaction of the ecosystem was very, very skeptical, and especially the first year was really, really hard because the Bostonian ecosystem was not really able to understand, and probably I was not really able to explain what was our value proposition. But after of about 1 year and a half of continue pushing, discussion, demonstration, and so on, we obtained one very big award from MIT. MIT declared Rolex one of the most 10 disruptive startups in the world. And this award changed completely our life, because now a lot of big company, Fortune 100 and so on, started to speak with us to propose some POC, challenge us with some real problem. In particular, we enter in contact with Procter & Gamble, and with Procter & Gamble, we started to work together. And they was the first adopter of Rolex at the worldwide level. And in 3 years, we became from a small vendor to Procter & Gamble to one of the 20 strategic vendor worldwide. And you can imagine that during this 3 years, the company grow a lot, but also as a company, we learn to do things in a completely different way. Because we started like, let's say, our main value was the technology. After 3 years, our main value was the ability of customer supporting. Also because we discovered during this part that having an amazing technology is good. But if you are not able to deliver real value, okay, there is no customer for you. Because when your technology start to be spread out, okay, you need to support, to train at scale. And you start to understand that the key of success, okay, are creating a complete company, able to deliver everyday value. At the end of 2021, I decided to exit from Rolex because I think that my journey was ended. And I spent the last year in creating some initiative that is helping Italian company and in general company from underserved market to enter in the US ecosystem. And in parallel, I also helping different company to enter in the US ecosystem. And the last job that I'm involved, that is like managing partner of BIP X-Tech USA, is because I'm helping BIP to enter in the technological market of US. And behind all this story, okay, there is this common pattern, okay? Entering the US market is very, very difficult because in this moment is, I think, the biggest market in the planet, the more sophisticated, and the most competitive. And when I compare the market from Italy or from US, okay, is completely two different planet. And if you try to replicate your success in Italy, in US, you are failing because the rules of engagement are completely different. And also, if you are looking for interaction with finance, venture capital, business angel, and so on, the rules of engagement are completely different. And for this reason, I created with some other US entrepreneur the program Accelerate Italy. Okay, because in Italy, I think there is amazing technology, amazing entrepreneur, but when they try to enter in the US market, okay, is a mess. Is a mess because first of all, there is a very big cultural gap. For example, one of the funny things that I experimenting every day is the risk perception. Okay, usually in Italy and in Europe in general, the ecosystem is about risk mitigation. Okay. I'm seeing a lot of pitch from Italian entrepreneur, European entrepreneur that try to pitch that his company is mitigating the risk. Okay, they are asking money, but the risk is very low. Here in US, the market and the finance is not about risk mitigation. It's about risk exploit. Okay, people want to take risk and want to have the right return from the risk that they are taking. Okay, and this is super important because when this company pitch in front of some investor and they start to pitch about risk mitigation, people, the investor, immediately lose interest. Low risk, low return, not my interest. Big risk, big return is my sweet spot. For this reason that we create Accelerate Italy in order to help Italian entrepreneurs to understand better the US ecosystem and to be successful in the fundraising, especially in fundraising phase. And we are explaining how the two ecosystems are different. We are preparing them to sustain deep conversation with US venture capital. And at the end, we are creating a network, okay, of US investor, business angel, venture capital, and so on, interested in supporting Italian company in this adventure of moving and crossing the ocean. And this is one very structured initiative. There is a program, there is a homework, there is a speaker. It's like a small MBA for Italian entrepreneurs. In the meantime, I also create with other Italian, American entrepreneur and managers another company parallel to Accelerate Italy, that is 42N. 42N have the same goal, helping Italian company to enter in the US market. But the approach is completely different. It's not a program, okay? It's a consulting company, and this company is working especially for the startup for free, for give back, to help, okay, to understand better the US ecosystem. You can imagine that also Accelerate Italy and 42N are two different companies, but there is a very strong collaboration between the two companies. And last week, 42N became an investor inside Accelerate Italy. And this is a very interesting fact that these two companies started to work together and also invest in each other. This is my working experience, and these two initiatives are the two initiatives that I created in this last year. Enter more in the topic of the today discussion. I prepared this slide about the difference between the European market and the USA market. Here I put that these different are in the B2B, because it's my experience. Okay, I worked all my career in B2B. I don't have a real experience in B2C, but a lot of these considerations are also applicable to the B2C market. And in this slide, I think that there is a lot of information, and there is, I think, the essence, because the two ecosystems are different. And in my opinion, is also a good explanation, also because the finance, okay, behind this market is completely different. And if we start to think about the market, okay, the European market is very fragmented. Selling products in Italy, in France, in Germany are three completely different business. Okay, you need materials in three different languages. You need to follow three different law system. Okay, there is a European Union, but there is a lot of difference between the different countries. You have to pay taxes, okay, in three different states. And managing a such fragmented market is very difficult. And also in terms of culture, okay, an Italian, a German, and a Swedish guys are completely different. Then, okay, there is no a real unique market. In US, there is a very homogeneous market. Okay, all the people is speaking the same language. Is simple, okay, to sell your product in Massachusetts, in Florida, and in Nevada. Okay, the difference are not so big. If you are able to sell in US, probably you are able to sell worldwide. Okay, because a lot of company is buying technology from US. Then be in US is a very, very advanced in terms of market, because it's simple. Okay, with the same approach, you have a very, very big market. the composition. In EU, there is a lot of small and medium enterprise. In US, okay, the size and the budget of the company are bigger. Okay, let's say a small medium enterprise here in US can be a company of $100 million, and they have the needs and the approach of an $10 million small enterprise in Italy, but they have 10 times the money and the budget. Then also the market, and the ability and the budget are completely different. Here there is more money that is flowing across all the company, and for this reason you can grow very, very fast. Also because if you are able to produce value, all these companies are paying you the value that you are producing. The needs of the market. Remember, because the US market, EU market is very fragmented, but also the Italian market is very fragmented. The needs of a company from Milan is completely different from the company from another company from Sicily, for example. Then is the needs of the market need to take in account a lot of local variables and so on. Then creating a standard offering in EU is very different. You need usually a lot of customization. And for this reason, that is very difficult to grow like a product company. Every time someone is asking you customization, we are different, we have special needs and so on, and you have to follow all these needs. In USA, the needs are more standard. The company typically have the same kind of problem, and they love standard. And in this way is simpler to create a products and sell the same products to different customers without a lot of customization. And this is in my opinion, is a game changer, because you can really create strong products and grow with the products. In Europe, it's different, because of this high demand of customization is very difficult to create a products and grow with the products. The type of engagement, in Europe, all the engagement at the end of the day is based on relationship. For example, I see this difference between the two different markets in the marketing budget. A typical Italian startup, they don't have budget, and they are trying to leverage on relationship. Oh, we will successful because we have these big guys in the board of director, or the CEO of the company is an ex BCG and have a lot of business relation. But they are not investing in marketing. Here, a typical American startup, half of the budget that they are asking to venture capital and so on is only devoted to marketing. Because relation matter also here, but at the end of the day, the engagement, is more value related. If you are able to produce value, company is listening you. okay, is accepting your pitch. They are willing to experiment your technology because they are interested in value. Of course, if you have a relationship, you can speed up this process. But at the end of the day, also, if you don't have this kind of relationship and you start to make a good marketing campaign and so on, you will find a lot of customers. And this is about also the due diligence, okay? In Italy, is all about personal trust, okay? When I try to sell Rolex in Italy, was hard because I invested a lot in creating this personal trust, okay, between Rolex, myself, the customer, the people that is buying the products, and so on. Here in US is only based on economics. Demonstrate that your technology, your products is able to produce value. If you are able to demonstrate, okay, you will be very successful, because the due diligence at the end of the day is simple. If you are able to demonstrate that you are able to create a big return of investment, great, you will go ahead. But okay, again, this is a very huge gap, because when the Italian entrepreneur try to enter the US market, for example, I make a lot of introduction to possible customer and so on. They leverage on the relationship and not on the value. And immediately, on the other side, they lose immediately the interest because they are not understanding, okay? And a typical Italian entrepreneur is not able to, and he don't have the real KPI to demonstrate the value of his solution. Also, another important point is the information. For example, if you start to research about a company, okay, here in US there is a lot of public information. LinkedIn, okay, is a great source of information. You will you can reverse engineering the org chart of a company through LinkedIn. In Italy, okay, there is company that is not present in LinkedIn. Okay, the org chart is not very clear. Who is deciding? Who is managing budget is very difficult to understand. Here is more simple. And this kind of information, at the end of the day, are the information that you need to speed up your process. Because if you are speaking with some guys that don't have a real power of decision, or the company don't have a budget for your products, you are wasting your time. With this kind of decision, you can qualify better your leads and be more successful, having more conversion rate. The other important point is about budgeting. In a lot of Italian company, there is a unique budget with decision maker. Dealing with this company is very difficult because the decision maker is completely overwhelmed by different vendor, different information, different decision. Here in US, also the small company, okay, they have a distributed budget with different people able to make a strategic decision. And usually when you are pitching about your technology, your company, and so on, you are finding on the other part of the desk expert people that is really understanding your technology and your business. In this way, if you have a very good value proposition, okay, again, is speed upping the process of creating revenue for your company. Okay. The other, okay, and this is the good part. The bad part okay, is that in Italy, usually you have one, maximum two decision maker. Here in US, okay, because there is a lot of process, you have multiple decision maker, and you have to create some approach in order to align the interest of multiple decision maker. When I help a company to enter in the US market, I think that this is one of the most, let's say, difficult barrier to deal with, because usually we are not like Italian and European guys. We are not able to manage this complex decision process. Okay, and then we have to create a completely different selling structure. Okay, in order to enter and be successful in this complex process decision. Okay, and this is another very, very big gap that an European company have to jump to enter in the US market. And at the end of the day, the big takeover that you have, that to be successful in the US, you need a very, very standard and scalable approach. To be successful in Italy and in Europe, okay, this is not the key of success. The key of success is having the ability to create a highly customizable solution. And for this reason, okay, the two ecosystems are so different. But in order to having the opportunity to grow up very quickly, the US ecosystem is absolutely better. And after this, okay, overview, you are understanding that the success on the US market is more predictable. Okay, if you do well your homework, okay, you study the market, you study the needs, you study the go-to-market, the probability to be successful, okay, is very, very high. Of course, execution, right team, and so on are super important, okay, but also is possible to understand if a company will be a good company or not. And for this reason, this is my personal opinion, that there is such difference in the finance ecosystem. Okay, here there is very few data. Okay, 2021 was a year of record for venture capital, both in US than in Italy. In US, venture capital invested more than $300 billion. Okay, $300 billion invested in startup, growing company, and so on. In Italy, there was another very good year, but the ecosystem invested about $1 billion, and a lot of this money are coming from Cassa Depositi e Prestiti, that at the end of the day are public money, okay? And for this reason that I think that the finance ecosystem in Italy and in US, okay, is not possible to make a comparison, because we are comparing a very well-structured industry here in Italy with an industry that is still a startup in Italy, okay? And we needed, like Italian ecosystem, to learn a lot before having the ability to emulate the US ecosystem. But coming back to the discussion about the market, I think that in US there is this industry also because the market is completely different. And at the end of the day, betting on startup is a very good investment in terms of risk reward. If a startup is growing very fast, creating a lot of return because the market is homogeneous, is standard, is recognizing the value and so on. If the same startup is in Italy, because the market is smaller, is fragmented, is relational, the success of this company will be not the same that in US. And for this reason, the ratio risk rewards in Italy is smaller. And for this reason, and this is again my personal opinion, that be a venture capital in Italy is more difficult. And for this reason, that without strong public incentive, there is no venture capital in Italy. And a good market, is creating a good ecosystem to grow very fast. And to having the opportunity and the ability to become from a startup a unicorn. And in order to complete my overview, especially about how venture capital is thinking, is working, is making due diligence, is approaching the startup. In this last year, I was involved in 2 different venture capital. One is 7 Train Venture, venture capital from New York, with a sweet spot in the pre-IPO company. 7 Train is helping to finance all the high-tech company that are going to be public. And on the other sense, I'm also helping Lab that is on a completely different sweet spot because it's more on seed capital and so on. And with these 2 experiences, I have the opportunity to understand better, the different stage of growing of high-tech company in the US market, and understand better what are the driver of the people that is investing their money. I see that my time is going to expire. If you want to reach me here, there is my email from Acceler Italy and 42N, and I'm open to have a discussion, question, or other type of interaction. Thank you very much for your attention.
Thank you, Andrea. Thank you for the very interesting presentation about your experience back here in Italy and there in United States. It was very interesting to, for a number of reasons, I have to say. So before going to the questions that might come through the LUMSA YouTube channel, and I invite again all the students to put their questions in the chat, and we will see them. But I want to break the ice. So one of the concepts I found very interesting is this going from Europe to United States is moving from risk mitigation to risk exploitation, you said.
Yeah.
That's very interesting because it is, how to say, stressing a totally different approach. But what does it mean in terms of a company trying to fundraise in United States? It means that if I am a European entrepreneur, I move to United States, I should take more risks than I would usually do in Europe, because this is well appreciated by EU investor, like being more ambitious in what I do. So can you elaborate a little bit the difference in terms of entrepreneurial approach to VCs, but also to the market as a whole? I mean, what does it mean? What do you have to change in your mind when you move from one side to the other of the Atlantic Ocean?
Okay. One of the risk concept, I think that is one of the main concept to understand the difference. Okay, for example, if you have a good company, okay, and you need a lot of money to grow very fast, okay, here is a good KPI. And also giving you the money, all the money that you need, okay, to be successful is another important point. In a lot of due diligence that I was involved, okay, I have to respond to one simple question. The money that these guys is asking are enough to achieve this goal? Because if are not enough, okay, the investment will be in a very bad situation, because they probably need more money without have achieved a very well-defined goal. And the value of the company, okay, is still low. And sometimes the venture capital prefer to give more money, okay, to a startup to be sure, okay, that they have all the cash flow to achieve one goal. When I'm dealing with the Italian investor, they try to reduce, okay, the money. No, you don't really need $2 million. If we remove this one and this one with $1 million, you are able to go ahead. Okay. And the other big difference about and is related to risk. When you secured a deal in US, immediately you have all the money in your bank account. If you have, let's say, $5 million from a venture capital, the day after that you sign the contract, you have $5 million on your bank account. Okay, and you can use this $5 million to run the company. Every time that I'm dealing with an Italian deal, an European deal, okay, the venture capital is not giving you the $5 million. They are giving you $200. After 2 months, if you reach some KPI, they are giving you other money. Okay, but okay, there is always this try to mitigate the risk. If you are not achieving this milestone, I'm not giving you the money. Okay, and a lot of time, because this approach, the company is failing. Also because it's very difficult to predict the future. Okay, and having all this internal milestone and so on is very stressful. The management is totally focused on following this milestone, okay, and not in selling and not in finding customer. Okay, and this is our typical example of this risk perception. Because of course, if you give a company $5 million on their bank account, you are taking a big risk, okay? Because you are risking all the $5 million. If you are put piece by piece, the risk is lower. But at the end of the day, okay, also the return is lower. Because if you have $5 million in your bank account and you find a sweet spot to grow very quickly, you can decide to invest all the money to grow at light speed. If you have all these, let's say, plan in front of you, if you find the right sweet spot, there is no way to accelerate your growth. Risk mitigation, less risk, less reward. Much risk, much reward.
Thank you again, Andrea. So this is very interesting. Actually, I would have a very or a pretty technical question then. That usually, in my experience, European venture capitalists assume that or predicate to their limited partners, their investors, that they can give the same returns that the venture capitalists give back to their United States-based investors. So what you're saying means that in Europe, since we prefer risk mitigation, we should tell our limited partners, our investors, that there is less risk, there is more risk mitigation, so don't expect the same results as in United States, but expect lower results.
This is a
technical question. So
it is a very good question, because if you are looking to results, at the end of the day, the venture capital in US is not producing this incredible result, in terms of return for the investor. I read recently some statistics that in average and limited partner have the same return for the stock market. If you are investing in the stock market or invest in venture capital, in average the return is the same. But the real benefit, I think, that is not for the limited partner, but is for the ecosystem. And having this more risky approach is producing a good return of investment for the limited partner, that is good, but also producing a great ecosystem, with a lot of black swan, because in average the return is good, not fantastic, but you have a lot of black swan, then company that is not average, that if you are investing in this company, you make a lot of money. Then for this reason, I think that the KPI of average return is not the right KPI. The right KPI is more a betting KPI. What is the probability to invest your money in a unicorn? That is completely different.
Okay, very interesting. And very interesting, this change of perspective. I was talking about investors, and you moved it to the entrepreneurial ecosystem that takes great advantage, of course, from having more ambitious venture capitalists. So before going, so I have a question here. I read the question, Andrea. Here is the question. What are the changes that a European Italian company could make to go to the American market, as well as making the product or service more standard? So Vincenzo took the point of standardization, but or product standardization, product/service standardization. But what's more than that in moving from one side? And your experience in Rolex?
Yeah, my experience was because in US there is more information available. You can understand better what are the needs of your customer. And if you are able to solve some real problem for your typical personas, in US, you are successful. But because, remember, there is not the same standardization in Italy, usually Italian entrepreneurs are not investing their time in study the market so deeply, because there is no return from this investment. And one of the big lessons is study the US market, because there is the key of your success. And in Rulex, I spend a lot of energy to understand what are the personas that is interested in my technology, why they are using my technology, what are the benefits, what are the stopper, okay, what are their interests. And the real change was we started like a technological company, but at the end we became a customer-centric company. Okay, not the when you are in Italy, usually you are finding company that is completely devoted to the technology. Here, to be successful, you have to put your customer in the center of your company. Okay, this is the big change, becoming a customer-centric company. And there is a lot of book that is speaking about this concept and so on. But if you are not experimenting in the US market, okay, it's very difficult to understand what means to become customer-centric. And know your customer is very, very, very important. I'm involved in a biomedical startup, okay, and is about 1 year that we are working together. We have a clear idea of our products, but we spent the last year to speak with customer. We didn't write a line of code. Okay, we are only speaking with our customer to understand the needs. When we have a clear idea of the needs, we will start to develop our platform. Okay, but the approach is completely different. Probably in Italy, we will start with creating a software platform and then start to pitch to the customer. Here, the approach is completely different. Okay, and is interesting because this company that don't have today any technology, but we have a contract with the customer that is super interested in our value proposition, and they are signing agreement, okay, that in the moment that we will exit with our technology, they will start with some proof of concept, paid proof of concept altogether.
Okay.
It's a completely different approach.
I see the point, Andrea. But then you are basically saying that it's not only the venture capitalists that are more risk taker, not only the startups, entrepreneurs, but also the corporations. Absolutely. And the managers within those big organizations. They typically don't like to take risk. What you're saying is that they are, in any case, more prone to take risks than in Europe, and specifically Italy.
Absolutely. Here,
but it's the whole ecosystem basically.
Yeah,
it's not only
the whole ecosystem here is more risk prone. When you are dealing with the customer, you need to take in account an important concept. Here, all the manager, okay, want to take risk in exchange of big rewards, but they don't make a regrettable decision. Okay, you have to propose some kind of business that is not regrettable. Risk, yes, but expose the manager to a regrettable decision is bad.
Okay, I see the point. But overall, going back to the investment ecosystem in the United States, you're also saying that basically it's easier to fundraise in United States than in Europe, because you mentioned that more risk taker, willing to supply more capital to companies. So overall, you would say that fundraising for a new company in United States is easier than in Europe / Italy? And if yes, why? If not,
no,
why?
I think that is not easier because there is an incredible competition. Okay, here I'm living in Boston, and there is a quantity of idea, startup, and so on that is incredible. Okay, and then it's easier if you have a very good idea and a very good team. If you have a good idea, a good team, is easier to fundraising. But in general, you have the strongest competition in the world. Okay, there is a company that arrive from all the country around the world to look for US money. Okay, then is for this reason that is not simpler. But if you have the right ingredients, okay, is simpler here. But there is another point that I think that is really important. If you have some finance in Italy, probably is good, but is not enough to become a unicorn. If you have a finance from US, okay, you can have tons of money to grow very, very fast and become a unicorn. Okay, this is the difference. And for this reason that I think that if you have the right ingredients, play on the US market is better. Because if you are successful, here you are really successful. In Italy, a lot of time, be successful means survive or grow very slow.
Okay. Thank you. I don't know if there are other questions from the students. I have my last question, and it's about, let's say, the Italian ecosystem. I would broaden a little bit the picture, including other countries in Europe. So what you're basically saying is that we don't have in Europe any hope to succeed in venture capital like United States has done so far, or you see some let's say weak signals also outside Italy in other ecosystems that has grown more than the Italian one, like of course the biggest one. So let's say for the moment UK, that is a slightly different case. But let's talk about the continental Europe. So, of course, the two other big countries in Europe, Germany and France, that in the last 10, 15 years has grown substantially, or even Spain that is smaller but is bigger than Italy. So what is your overall judgment about the growth trajectory of venture capital in Europe? So
I think that venture capital in Europe in general have a very big opportunity because the US ecosystem is so sophisticated. Also, the typical, let's say, the cost of an investment is very high. Okay, in the Boston area, the typical pre-money evaluation of a startup is about between $10 and $20 million. Okay, and these are startup at the first investment. It's very, very high. Okay, for this reason that there is a lot of venture capital that start to look for investment in other country. Europe is one of these country. And I think that for venture capital in Europe, there is a huge opportunity to create partnership with US venture capital and creating a completely different pipeline. Okay, for example, an Italian venture capital can give the first finance to Italian company, okay, to grow, and creating connection with US venture capital to help this company to exploit the US market and also the US finance, but with a strong agreement. And this is one of the thesis, for example, behind Accelerate Italy, and we are creating a lot of this connection between US investor, Italian investor, French investor, and so on, because for a US investor invest in Italian company is very difficult because they don't understand the culture, they don't understand the law, they don't understand the country. And having this agreement can be a win-win opportunity for the Italian venture capital and for the US venture capital, or in general for the EU venture capital.
Okay. Thank you, Andrea. Very, very clear. So I would, if you don't have additional questions, I would stop it here. Thank you again, Andrea. I don't know if you have final remarks about your topic, something you want to say to Italian students that are interested into entering the venture capital industry. The remark would be just move to United States or something else. Maybe last thing.
Okay, a last thing for the student. I try to pitch the situation today. You are able to change this situation. Then if you decided to become a venture capital in Italy, change the game. Because I learned here in US that is possible change the rules of the game, and especially young people, young student, young brilliant mind can change the rules of the game, and then try to follow your dream and try to change the game for better. This is I think that is the real opportunity that these young students have in their hands.
Okay, thank you very much. Being a game changer is a very good wish for all our students, and usually youngsters are those who change the world, so is promising in a way. So Andrea, thanks a lot for all for everything you shared with us. It was very, very interesting for me, and I'm sure also for all our students participating to this innovation talk. I wish you the best for your new challenge, the BIP challenge, X-Tech, United States, and hopefully there will be more opportunities in the future to share your views with us. Thanks again, and we wish you the best. Okay.
It was a pleasure. Thank you, Domenico. Bye.
Thank you. Thank you, everybody, and see you on next Wednesday, next Innovation Talk. Bye-bye.